understand from you how you perceive the impact of artificial intelligence on the future of mutual fund investments, especially in terms of the decision making process.
Yeah, we have been witness to the growth and emergence of the modern mutual fund industry since 1990, and that too on a day-to-day basis. And everything has changed every 3-4 years. But I think we are far off from, artificial intelligence being deployed for investment advice or decision making, simply because there is real dearth of natural intelligence being applied on a consistent basis for years together. I find that the industry often forgets the basics, and simply because that is how the financial markets are configured. We get carried away. We get chasing recent past performance is the norm. Everybody tilting towards a certain asset class at any given point. There will be so applying basic natural intelligence should be the first goal. I think what artificial intelligence or all kind of technology enablement, it will be very helpful in democratizing, in scaling up, in becoming, enhancing the acceptance of things. Now in a country where everybody is, able to make a small payment for a vegetable vendor, our ability to participate and our ability to understand, but that actually presents a great challenge in terms of what we are doing right now, to be able to reinforce, because financial education is all about a set of 5-7 principles and about 100 to 200 things which should not be done, and reminding it time and again, because doing the wrong things is actually very tempting, and there is also a very strong short-term case for actually following it. We have seen the speculative bubble emerging in our neighborhood, in the real estate, in the houses, or some assets, something or the other, all the time, and overcoming that and being regular, enforcing discipline. So I think we should just put our head down, make things simple, make it scalable, democratize it, and it is happening. If you look at what has happened, what is the great thing about this movement towards SIP in investors embracing SIP, and now nearly it should be very very much close to about 18-19,000 crore of inflows every month through SIP. The net effect of this regular investment in equity is not choosing a great fund. It is basically participating in equity in a structured, disciplined manner. And in the course of last 2-3 years, it is very hard to find an investor who is disappointed with. There will be investors in good funds, there will be investors in bad funds, but it is very difficult to find an investor who is disappointed with his experience, because everybody is a winner. You don't have to be on the top. You have to really win with your allocation, and you have to be keeping your basics in place and enforcing it. You don't need artificial intelligence.
All right. Let me flesh out this conversation more from a use case perspective, and let me come back to you, Meghna, because CreditWatch focuses on providing insights into credit risk and business health. So according to you, how can businesses leverage AI and data analytics for informed decision making in 2024, considering this very dynamic economic landscape?
Right. So, with businesses, right, traditionally the way businesses were run earlier, it was a very closed market and everybody knows everybody. But today, when businesses are now trying to expand their horizons and try to scale their businesses and do business with entities that are new to them or not known to them, I think having an insight into who your potential partner or customer is, it becomes really important from a scaling and managing business risk perspective. So what businesses can do now is use these kind of advanced exponential technology to kind of have the right information available to them at the right time. Like, let's look at this, simple thing of a B2B transaction, one business doing business with the other. How do you know that the person I'm doing business with, if it's a new partner, will pay me on time? Because that's, I think, one of the biggest problems in India that all of us face as small businesses. That, in India, the biggest problem is 6 to 10% loss, right, in your entire working capital, what you generate as your receivables because of the delay in terms of getting paid, right? It's something that all of us face, as small businesses, is we always get paid maybe within 3 to 6 months, sometimes more, but never mostly within 30 days. So now there are a lot of technologies available now where you can actually do some sort of a mini credit check or credit credit evaluation of your potential vendor and partner, so that they can anticipate the business days with which they can meet their commitments. And then you can again manage your own working capital cycle better, because every business in India is almost like a lender, but it doesn't charge interest to its partners, right? It waits and collects the invoices. So from that perspective, I think these sort of exponential technologies now available can help you in a simple, intuitive way, because you're a layman, you're not a bank, you're not a financial institution, so you can't have all of that domain expertise. But when there are these sort of simple AI-led solutions available for you, you can at an instant know, how do you kind of manage dealing with a particular partner, based on what the technology tells you in terms of how this partner's current state of health is, right? Those are the kind of strategies business can use in terms, because it's so fundamental that you need to know KYB, know the business that you're working with, and that becomes, and there 80% of the losses or bad events can be mitigated by just knowing what you're getting into, right? So prevention is always better than cure.
Absolutely. And there's an empowerment aspect to this as well, because for example, when we look at, say, some of the kirana walas, they're using dynamic working capital loans being provided to them in the morning, where once they're done in the evening, the loan gets squared off and whatever is left is their profit. It's also, in a sense, change their behavior, change their approach towards financial products, because they understand the context of that financial products in their business, and therefore that's helping financial inclusion as well.
Right.
And speaking of financial inclusion, absolutely, getting paid at the right time, right? And it changes according to how your business is progressing, and that's where the AI element comes into play as well. Taking that conversation forward to you, Dr. Gupta, your thoughts on the role that you envision for robo-advisors and AI-driven financial planning tools in empowering individual investors and promoting financial inclusivity in this new age era. You spoke about the sachetization of financial products. How do you see things moving forward, especially as we venture into this AI-driven era?
No, I'm a big fan of AI-driven financial advice and robo-advisors. I think it is also important for us to view as to who is the right target segment for these AI-enabled products. Now, for example, the rich and the affluent, having been used to financial advice by advisors, would want to continue the same way. But when we talk of masses, and even within the masses, when we talk of certain specific segments, like for example, youth are digital natives. They know the technology, they know how to use the smartphones, and hence for them, making smaller investments or starting with their first time investments, I think the tools help them get on to the journey faster. So for bringing youth to the financial world, maybe AI enabled financial products definitely make a huge impact. Contrary to that, when we talk of women, because women is also an excluded segment financially, when we talk of women, and when this is our experience, having launched a financial platform for women, that they will not necessarily be comfortable with a robo advisor telling them how to make their investments, or even understanding investment or recommendations based on their risk profile. I think that is something where women as a target segment need a phygital approach rather than just a digital only do it yourself approach. And that's where we've seen that a human touch or a human element along with a digital product makes sense. So I think customization of the delivery in which we deliver the products to certain target segments plays a very important role. And for the masses, when we talk of the grassroots level masses, what we have observed is not every individual will have a smartphone. In most of the India, especially when we talk of rural India, every family has a smartphone, but not every individual. So, how do we use AI enabled financial recommendations which are focused on household income rather than an individual income becomes very imperative. Yeah, so I think there is a lot of scope for the technology to play for bringing in the masses, but the approach has to be really target segment oriented.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.